Bust loose end.
Area is sanitized. All targets destroyed. Solid copy. No movement detected. 2-6 going into holding pattern.
Welcome back to the Capital Mindset Show, guys. We are your hosts, Austin and Fabio, your hosts with the most. And today we're going to be covering Activision. Again, we're going to be revisiting Activision C, kind of comment on some of the share price decline that has taken place as of recently. And then also kind of comment on our thoughts on the CEO, as well as some arguments that there've been and some recent developments that there've been regarding the CEO of Activision. And then sort of our opinion on if the CEO should go or not. And then also we're going to be covering asset allocation in this video. So without further ado, let's jump right into this. First and foremost, Fabio, I have to ask you, when it comes to asset allocation, you typically like to say that investing is both art and both science. Mm-hmm. So now my question is, I would assume operating from that same logical standpoint that asset allocation is both art and both science. But now my kind of question is, how do you view asset allocation in regard to the science? Is there sort of a methodology by which you like to follow? And then more so in the art side, is there more of an art that you like to apply to asset allocation in and of itself? So with that, let's actually use an example as well. Let's say for Activision right now, because we both disclosed that we're building a position in Activision, what is your asset allocation strategy in regard to Activision? And then also, that's the first question. The second question is also the art and science aspect of asset allocation itself. So let's hear it.
Okay, so for Activision, I'm building out my position. I do it in terms of like ranges, right? So the ranges will dictate, and I think it's good to pull up the visual of the model. So to give everyone an idea, the risk reward, assuming no buybacks and assuming a 15% required rate of return, I can assume safely that about 15% growth rate in cash flows at the current price is where I can assume those assumptions. And I'm not including any buybacks, which I do think they will be doing some buybacks over time. They are paying a dividend and I would be reinvesting that dividend. But if I was looking at this, I think I said in the last video, so I don't want to repeat too much about that, but if it was below $60 in the 50s range, my nibbles would turn into bites. And then if it was in the 40s range, it'd turn into gulps, right? I'd be adding larger positions. Yes. So for example, I've only doubled my position Friday, and I turned my position from a 0.3% of my portfolio to about 0.7. So it's a little more than double. And that goes to show that I'm still, just doing nibbles in the grand scheme of things, because I said that the long-term allocation strategy, if it gets into like the 50s, will be about 5%. And we'll do a dedicated video on position allocation. We had a question or comment about that they wanted a video on just that. And we'll do one, because actually that's potentially harder, more difficult, right? Going into your question about it.
Nuance.
Yeah, there's a lot of nuance involved. And it's more difficult than actually picking a stock, right? Because, okay, so going into your question. So the art of it is making sure that you're not destroying your psychology, right? What does that mean? Well, if you're heavily invested in one stock and the stock does poorly, well, that's challenging for even the most gutsy investors, right? So you're not doing yourself any favors, because you could be right? You could be right about a company. you could be absolutely right on everything, but if you're wrong on the timing, it's going to really suck. And then you want to avoid, you need to understand how you think, right? You need to understand the mechanism of your brain, the fear mechanisms, and you need to kind of not fight against it so much, but acknowledge it and then work with it. Okay. So one way in which you work with it is by hedging your risks. And that can be done through a diversified portfolio, not too diversified. Everything must have a place, right, in your portfolio. It's not just some random allocation, 5% for 20 stocks. No. It's about acknowledging the potential of a stock, the risks of a stock, not lying to yourself about what those risks are, and acknowledging what the risks really are, and then positioning yourself in a way where if it doesn't go well, you're not gonna suffer, right? Both mentally and financially. And if it goes well, that you're also going to feel it, right? So that goes into like, what is your vision for the stock? What is your vision for the company? Whether or not you're right or wrong is irrelevant in that point, right? That comes later. But it's, first of all, if you don't even see the potential of a stock, for example, like let's say you think a stock's max potential is only doubling, right?
Mm-hmm.
From where you see it. Why would you include that if it's 0.5% of your portfolio? Now, us presuming that maybe all of your stocks are like that. Well, probably not, right? So for example, I'll use ASPS as an example. ASPS was, and we were hesitant to do follow-up videos, even though the position's done really well. I don't want to turn this channel into something hyping up a microcap. So I'll say right here, do not invest.
To the moon.
Yeah, do not invest.
Yeah.
Do not follow me on the trade. Investment, it's not really a trade, but do not follow me on the investment. If it goes to zero from here, let me lose all my money and not you. I've already took in some profits, but don't follow me on the trade.
Just don't follow us. Don't
follow. Yeah. Ignore that company. The point is the allocation strategy. Yeah. The learning opportunity of the allocation strategy that was implemented there. So the point of that investment was a hedge if things went wrong with the housing market, and there was a very cheap company with a lot of things that seemed to be going wrong for it. So the risk reward was there, in my opinion, at the time. And I was buying it around $6 and adding to $7 and $8, and I stopped there. And then it rose all the way up to the 14s where I started to trim, and then I trimmed some more. But I still have a position in the company. But the point is, I allocated about 2.4% of the portfolio. And the reason why I did that is if it were to go to zero, if it were to go bankrupt, I would not feel it. My portfolio would not, it would be a day-to-day fluctuation. And if it were to do what I thought it could do, I would feel it, because I could generate between doubling the position or more than doubling the position to, in the most extreme case, around 10xing the position. I hate using that word, but 10xing the position. And in that case, my portfolio would really feel the effects. So you got to make sure that the position is meaningful, because if it's not meaningful in your portfolio, why do you have it, right? And you want to make sure also that if you can acknowledge the risks, that you don't make it such a large part of your portfolio, so that if something goes wrong, let's say again, you're correct. Let's presume you're correct. But if you're wrong on the timing, what is the likelihood that you're going to stick by it? If it's 50% of your portfolio and the thing crashes 75%, you can be right. But if you have so much concentration, what are the odds that your fear is not going to win out? Okay. And you're going to sell. So that's the art side of position allocation. It's understanding that you are human and that there are things that will cause you to question yourself. And so if you cannot so much fight it, but just adapt to it. Okay. And then that's the art side. And the science side is more along the lines of measuring, standard deviation, beta. So just a brief overview of beta, for example, that's just correlation with the market. The tendency is that higher beta instruments can be, I'm using these words, riskier, right? They can be more volatile. Now, beta can be a little bit misleading, but there's not a video on that. But for the most part, you can understand correlation. Just think about correlation with the broader market. Okay. If it correlates to a higher degree, it will tend to go up more than the market and go down more than the market. So you want to make sure your portfolio doesn't have an unreasonable beta. And I want you to mix the art with that, and don't try to actually you can go calculate your beta, but you can reasonably assess whether or not your portfolio positions or whether or not your exposure is high beta. You can reasonably assess that. If you're honest with yourself, keyword, if you're honest with yourself, because I use that word or that phrase a lot, because let's say you're a university student and you have an exam tomorrow and you think you're ready for it. Like, you're lying to yourself in this assumption. You're lying to yourself and you tell all your friends, I know everything in the stock, right? I'm not the stock, but for the test tomorrow. I know everything. I don't need to study. Well, if you're lying to yourself, your friends aren't going to care. Your friends are going to be like, okay, man, you do you. And we're going to go take the test. We're going to study because we're not ready. And you're ready. You say you're ready. And then you bomb the test. Well, you were lying to yourself, and the only one you hurt was yourself. So that's the same with investing. If you're lying to yourself about what you presume to be the risks, then you're only going to hurt yourself. So you got to be honest with yourself as to what it is you know and what it is you don't know. And that requires a tremendous amount of self-reflection. And that's why investing is a multifaceted cake. It involves a lot of details on every layer, and that all of them kind of add up together to make a great investor.
It's a philosophy.
Yeah. Well, listen to
Yeah.
Buffett. Buffett's basically a philosopher.
I love it.
Yeah. Half of Buffett's statements are philosophical statements.
Yeah.
Right. When he's talking to the investor base and giving them like little nuggets, it's basically like a philosophy class. But a better philosophy class, because he's trying to instill within you life lessons that he accumulated over the years. And we try to explain some of those or emulate those in some of the content in this channel. For example, like in the you should think of investments as ownerships in businesses. And if you don't think that, the reasons why that can be detrimental is because then you start to have a disconnect with your investments, and you don't understand what it is you own. And then you don't sell at the right time, buy at the right time. And it's not about picking the perfect time. It's the right time, right? That doesn't mean the word perfect. Perfect is I buy ASPS at the absolute bottom and I sell at the absolute top. That's not going to happen. But I'm going to buy when I'm comfortable and sell when I'm comfortable. And that's the right time. And everyone has a different right time. Everyone has a different right time.
Yeah.
So when you,
yes, no, go.
No. So when you think the risk reward is there, for example, in Activision, then you add, that's where I'm at. I think the risk reward at these current prices is enough for me to start to consider it a ancillary position in my portfolio. And as it gets lower, I begin to say it becomes a bigger and bigger position.
Yeah. So kind of what I'm at least gathering from this, just sort of reading between the lines here, you're really echoing the importance of learning how to stand on your own island in and of yourself, like build your foundation, stand on your own island, and then come to your own conclusions and assumptions about things. And don't allow yourself to get influenced by the sea that is herd mentality, crowd mentality,
absolutely,
et cetera, and so forth. So now kind of shifting the conversation back to Activision, and let's talk about the one and the only, the CEO. I've been seeing recently, there was a Wall Street Journal article that was posted, which, correct me if I'm wrong here, they had said that the CEO was aware of and was complacent in the culture that was permitted inside of Activision for many, many years that they're currently being sued for, and the SEC is investigating.
By chance, can you define what you mean by culture? What kind of culture was it? Can you define that? If you don't want to like abbreviate the word horse's mouth, you can actually just Google it for us and then show the audience. So see what the media says it, so we can go off of them, so we don't misquote them.
Yeah, that's probably better. Basically, and then to kind of add on to this as well, I've been seeing sort of a push lately from the head of Xbox and then Sony that they're kind of growing sick of the CEO himself as well. And
blood in the water.
Yeah, and basically, I kind of wanted to pick your brain now and see what your thoughts about that were. And do you think it might be a potential benefit or a detriment to the business itself should the CEO leave? Okay, I think I found the
I'll answer that question
here we go
while you're pulling that up, but I don't think the business is a CEO. going back to Buffett again, he always says or echoes the wisdom of investing in companies where the CEO is not what makes the company. And I think Activision is one of those. So what does it say? Activision knew for years about sexual misconduct allegations. So, but that's the key word. The key word there is allegations, and whether or not those allegations are warranted is a separate argument that, again, we have to be honest with ourselves and say, are they? Now, if they are, then that's problematic.
Well, this also ties directly into the SEC investigation that's happening with this right now as well.
Yes, because
the SEC is investigating if Activision did not properly disclose that there was, I'm just going to call this culture for lack of like just kind of a summary term, just to kind of summarize this so I don't have to keep saying allegations of blah, blah, blah. I'm just going to call it culture. If there was, if they didn't disclose sort of this culture that was happening here within this company. And that's kind of interesting because I know that this Wall Street Journal article, this is what's contributing a lot to that share price decline at the moment that we are currently seeing, which then also kind of colors my vision here and then further goes to the other question I was asking you, which was basically, is this
we got to be very careful that it's not another Business Insider. Did you see that?
Business Insider?
Yeah, some of our audience might be aware or listening and saying, yep, I was about to say that. And Business Insider with David Portnoy.
Oh, that one.
Yep. Yeah. So you see how Business Insider jumped the gun. Remember, we got to remember that these are for-profit entities that get money every time you click. And
also true, yeah.
They are incentivized
there's obviously to be a special interest there.
They profit from the outrage. They profit from outrage. So we need to be careful. And they have a tremendous amount of power because they have the ears of people. That is why these publications have so much power. And I'm not talking about Activision, I'm talking about the Wall Street Journal. And I always, maybe too much, I spit on them, but the journalist majors.
Yeah, sort of an ongoing joke at this point.
It's an ongoing joke. I don't actually hate you journalist majors, if any of you are listening. But I think sometimes it's when I read their takes on, like, for example, finance and analysis, I think sometimes it's funny. And then so it makes me wonder, so it makes me wonder if, for example, if I think that what they're saying is cringeworthy, are they cringeworthy in other topics and I just don't know enough about those topics to cringe? Does that make sense?
Yeah.
So because it does tell me a lot about someone who wants to claim an authority, right? And then when they actually spit out, something about that, they don't really have the merits to back that authority. Like finance news, I see that a lot. But so then it always makes me question, okay, if they're saying all this stuff about this and I know that that's wrong, what else is wrong? Because remember, everyone's way of thinking will propagate into everything else. So then you kind of can question things.
That sort of ties into an interesting concept that I think should become a regular occurrence that we sort of discuss here in the Capital Mindset Show, and that becomes the Overton window, where a lot of people will hear something that sort of is contrary to their sort of preconceived notions or their Overton window, and their minds shut off. It's a psychological phenomenon. And for full disclosure, I'm still new to the markets, but even in my short time investing, I've seen people almost of sorts get married to companies, and then they're very vehement about defending their investments. Now, I do understand why, because your money, your hard-earned money, is tied into these respective companies. But that's why, as an investor, at least by what I've gained, it's exceptionally important to make sure that you legitimately keep your mind open with these sorts of things. Make sure that you keep your mind open to any and all possibilities, even things that might really kind of challenge what you hold to be conventional wisdom. So that's just kind of my 2 cents about this. But even sort of bringing it back to the CEO now, do you think, again, that the CEO leaving, do you think this might have a detrimental impact to Activision? Or do you potentially think that the CEO leaving might open the door for further expansion of Activision? Because we know that the business fundamentals themselves have not changed. The balance sheet's incredibly strong. The cash flow is incredibly strong. Their IPs are incredibly strong, et cetera, and so forth. Or is it also a third, just sort of like a wait and see, where if he goes, who comes in to replace him? Sort of that third scenario there. So
Yeah, I'd say it's the third one, because if they replace him with someone who's not going to be friendly to shareholders,
yeah,
or because the CEO, all the same guys there developing the games will all still be there. The CEO is just the direction, right? The long-term strategy of the business, and that's what you want to pay attention to, and that's what the CEO controls, and that's what he represents. He or she represents. So, with that being said, if they replace this individual with someone who is not as competent, that can be a problem. You want to pay
yeah,
attention to that. But I actually suspect that if this person steps down, the stock price actually will experience a little bump. That tends to happen when the narrative is about the CEO in a negative light. You got to remember that ESG funds are now a big portion of money, and they're
makes
selling off
sense.
like crazy, right? So
Yeah, and
mechanically,
that's
it's
yeah,
separating mechanical decline versus fundamental decline. This is
yeah,
mechanical decline in a stock price, not fundamental, which is why I like it. I like to
yeah.
find companies that are in mechanical decline and not fundamental decline.
Yeah, well, also that kind of ties into what you were talking about earlier with asset allocation, where I see like a push with a lot of people like, oh, buy the dip, buy the dip, buy the dip.
Exactly.
It's like, but
That's not
wait,
always.
yeah. Is there structural deterioration, as you like to call it, structural deterioration of the business itself? Have the fundamentals changed? If so, you should think 3, 4, 5, 10, 100
Mhm.
times about buying the dip,
Yep.
But with that being said, do you have any closing thoughts here before I wrap up today's
No,
episode?
simply that I will be continuing to add to my Activision position, even though it's a really small part of the portfolio right now, and I'm excited for the business as it keeps going down. I get more excited.
Well, with that being said, we are your hosts, Austin and Fabio. We hope that you've enjoyed this episode of the Capital Mindset Show. If you have, please be sure to share the video. It really helps out the channel. Please be sure to like, comment, and subscribe, and visit our website at capitalmindset.org. We're your hosts, and we'll see you guys next time. Take care.